Unit 20 Priority Sector Advances Agriculture. JAIIB Principles and Practices of Banking Module B. Page number 67. Agriculture loans. Agriculture loans are allowed as short-term loans and medium or long-term loans. Short-term loans. Loans up to a period of 3 years are short-term loans. These loans are generally crop loans, including Kisan Credit Card. These include loans for pre-harvest activity and post-harvest activity. Crop loans are sanctioned on the basis of scale of finance. Medium-term or long-term loans. These loans are of duration of above 3 years. These are given for minor irrigation, farm or land development, purchase of agriculture machinery, etc. There is no distinction between direct and indirect agriculture. WEF 23.4.15. The lending to agriculture sector shall include 1. Farm credit open bracket short-term crop loans and medium or long-term credit to farmers close bracket. 2. Agriculture infrastructure and 3. Ancillary activities. 1. Farm credit. A. Loans to individual farmers open bracket including self-help groups SHGs or joint liability groups JLGs, that is groups of individual farmers, provided banks maintain disaggregated data of such loans close bracket. Directly engaged in agriculture and allied activities viz. Dairy, fishery, animal husbandry, poultry, beekeeping and sericulture. This will include 1. Crop loans to farmers including traditional or non-traditional plantations and or horticulture and loans for allied activities. 2. Medium and long-term loans to farmers for agriculture and allied activities. Example, purchase of agricultural implement and machinery, loans for irrigation and other developmental activities undertaken in the farm, and developmental loans for allied activities. 3. Loans to farmers for pre and post harvest activities viz. Spraying, weeding, harvesting, sorting, grading and transporting of their own farm produce. 4. Loans up to rupees 50 lakh against pledge or hypothecation of agricultural produce including warehouse receipts for a period not exceeding 12 months. 5. Loans to farmers under the Kisan Credit Card Scheme. 6. Loans to distressed farmers indebted to non-institutional lenders. 7. Loans to small and marginal farmers for purchase of land and agricultural purposes. B. Loans to corporate farmers, farmers producer organization or companies of individual farmers, partnership firms and cooperatives of farmers directly engaged in agriculture and allied activities up to an aggregate limit of rupees 2 crore per borrower. Open bracket loans as per categories A open bracket 1, 2, 3, 4 close bracket above close bracket. 2. Agricultural infrastructure. 1. Loans for construction of storage facilities open bracket warehouses, market yards, godowns and silos close bracket, including cold storage units, cold storage chains to store agriculture produce or products irrespective of location. 2. Soil conservation and watershed development. 3. Plant tissue culture and agri-biotechnology, seed and production of biopesticides, biofertilizers and vermicompositing. For these loans, an aggregate sanctioned limit of rupees 100 crore per borrower from the banking system will apply. 3. Ancillary activities. 1. Loans up to rupees 5 crore to cooperative societies of farmers for disposing of produce of members. 2. Loans for setting up of agri-clinics and agri-business centers. 3. Loans for food and agri-processing up to an aggregate sanctioned limit of rupees 100 crore per borrower from the banking system. 4. Loans to primary agricultural credit societies, PACs, farmer service societies, FSS, and large size Adivasi multi-purpose societies, LAMPS, for an on-lending to agriculture. 5. Loans sanctioned by banks to MFIs for on-lending to agriculture sector fulfilling the specified conditions. 6. Outstanding deposits under RIDF and other eligible funds with NABRD on account of priority sector shortfall. To compute 7% or 8% target, small and marginal farmers will include farmers with landholding of up to 1 hectare considered as marginal farmers, and farmers with landholding of more than 1 hectare and up to 2 hectares considered as small farmers. Landholding agricultural laborers, tenant farmers, oral lessees, sharecroppers. Loans to SHGs or JLGs, that is groups of individual small and marginal farmers directly engaged in agriculture and allied activities, provided bank maintain disaggregated data of such loans. Loans to farmer producer companies of individual farmers and cooperatives of farmers directly engaged in agriculture and allied activities. The membership of small and marginal farmers is not less than 75% by number. Page number 68. Their landholding share is also not less than 75% of the total landholding. Kisan Credit Scheme 2012. KCC scheme implemented during the year 1994 has been modified by RBI or government on recommendations of working group to review the scheme, open bracket, Chairman Shri T. M. Bhasan, close bracket, W.E.F. May 12, 2012. Applicability, implementation by commercial banks, RRBs and cooperatives. Activities covered: short-term credit requirements for cultivation of crops, post-harvest expenses, produce marketing loan, consumption requirements of farmer household, working capital for maintenance of farm assets, and activities allied to agriculture like dairy animals, inland fisheries, etc. An investment credit requirement for agriculture and allied activities like pump sets, sprayers, dairy animals, etc. Eligibility: 1. Farmers, individuals or joint borrowers, open bracket, owner cultivators, close bracket. 2. Tenant farmers, oral lessees and sharecroppers. 3. SHGs or joint liability groups of farmers including tenant farmers, sharecroppers, etc. Fixation of credit limit or loan amount. A. Farmers other than marginal farmers. 1. Short-term limit for first year, open bracket, in case of single crop in a year, close bracket. Scale of finance for the crop, open bracket, as decided by district level technical committee close bracket into extent of area cultivated plus 10% of limit towards post harvest or household or consumption requirements plus 20% of limit towards repairs and maintenance expenses of farm assets plus crop insurance, PAIS and asset insurance. 2. Limit for second and subsequent year. First year limit as above plus 10% of the limit towards cost escalation or increase in scale of finance for every successive year, open bracket, second, third, fourth and fifth year, close bracket, an estimated term loan component for the tenure of Kisan credit card, that is 5 years. More than one crop in a year. The limit is to be fixed as above depending upon the crops cultivated as per proposed cropping pattern for the first year and an additional 10% of the limit towards cost escalation or increase in scale of finance for every successive year, open bracket, second, third, fourth and fifth year, close bracket. Term loans. TL is for investments towards land development, minor irrigation, purchase of farm equipments and allied agricultural activities. The long-term loan limit is based on the proposed investments during the 5-year period and the bank's perception on the repaying capacity of the farmer. Maximum total amount. The short-term loan limit for the 5th year plus the estimated long-term loan requirement will be the maximum permissible limit MPL and treated as a Kisan credit card limit. Fixation of sub-limits. 1. The card limit is to be bifurcated into separate sub-limits for short-term cash credit limit cum savings account and term loans because interest rates are different. 2. In case the revision of scale of finance for any year by the district level committee exceeds the notional hike of 10% contemplated while fixing the 5-year limit, a revised drawable limit may be fixed. For marginal farmers, a flexible limit of Rs 10,000 to Rs 50,000, open bracket, as Flexi KCC, close bracket, based on the land holding and crops grown. The composite KCC limit is to be fixed for a period of 5 years on this basis. 6. Disbursement. The short-term component is in the nature of revolving cash credit facility without any restriction in number of debits and credits. Each installment in a particular year will have to be repaid within 12 months. Delivery channels: A. Branch, B. Check facility, C. ATM or debit cards, D. Business correspondence and ultra-thin branches, E. POS available in sugar mills or contract farming companies, F. POS available with input dealers, or G. Mobile-based transfer transactions at agricultural input dealers and mandis. For CC limit and the term loan limit, 2 separate electronic cards may be issued. 8. Validity or renewal. Banks may determine the validity period of KCC and its periodic review. Repayment period: 1. Each withdrawal should be liquidated in 12 months without bringing the debit balance to zero. 2. TL, a normally 5 years. Banks may provide longer repayment period. Margin to be decided by banks. Security 1. Hypothecation of crops up to card limit of rupees 1 lakh as per the extent of RBI guidelines. 2. With tie-up for recovery, banks may consider sanctioning loans on hypothecation of crops up to card limit rupees 3 lakh without insisting on collateral security. Classification of account as NPA. 1. Account could be treated as standard when the balance outstanding is less than or equal to drawing limit open bracket short term open bracket crop close bracket loan close bracket at any point of time during the preceding 1 year. Page number 69. Term loan under KCC has fixed repayment schedule and is to be governed by extant prudential norms. Different types of medium-term loans in agriculture. Type of loan: land development loans. Purpose of the loans: loan for land clearance, land leveling, land shaping, bench terracing, etc. All farmers are eligible. Type of loan: minor irrigation loans. Purpose of the loans: loan for digging and deepening the wells, energizing of wells, laying of pipelines, etc. All farmers are eligible. Type of loan: farm mechanization. Purpose of the loan: loan for purchase of tractors, accessories, trailers, power tillers, combine harvesters. All farmers are eligible. Type of loan: horticulture. Purpose of the loan: loan for development of fruit orchards. All farmers are eligible. Type of loan: land purchase loans. Purpose of the loans: loan for purchase of land. Small and marginal farmers are eligible. National Agricultural Insurance Scheme NAIS open bracket Rashtriya Krishi Bima Yojana RKBY close bracket. The objectives of is to provide insurance coverage and financial support to the farmers in the event of failure of any of the notified crop as a result of natural calamities, pests and diseases, and to help stabilize farm incomes, particularly in disaster years. Farmers to be covered. The scheme covers following groups of farmers. A. On a compulsory basis, all farmers growing notified crops and availing seasonal agricultural operations SAO loans from financial institutions, that is loanee farmers. B. On a voluntary basis, all other farmers growing notified crops, that is non-loanee farmers who opt for the scheme. Risks covered and exclusions. Comprehensive risk insurance will be provided to cover yield losses due to non-preventable risks, viz. A. Natural fire and lightning. B. Storm, hailstorm, cyclone, typhoon, tempest, hurricane, tornado, etc. C. Flood, inundation and landslide. D. Drought, dry spells. E. Pests or diseases, etc. Losses arising out of a war and nuclear risks malicious damage, and other preventable risks shall be excluded. Sum insured or limit of coverage. The sum insured SI may extend to the value of the threshold yield TY of the insured crop at the option of the insured farmers. However, a farmer may also insure his crop value of threshold yield level up to 150% average yield AY of notified area on payment of premium at commercial rates. In case of loanee farmers, the sum insured would be at least equal to the amount of crop loan advanced. Further, in case of loanee farmers, the insurance charges shall be additionality to the scale of finance for the purpose of obtaining loan. In matters of crop loan disbursement procedures, guidelines of RBI or NABRD shall be binding. Premium rates. Generally, the premium ranges from 1.5% to 3.5%. Levels of indemnity and threshold yield. 3 levels of indemnity via 90%, 80% and 60% corresponding to low risk, medium risk and high risk areas shall be available for all crops open bracket cereals, millets, pulses and oilseeds and annual commercial or annual horticultural crops close bracket. Based on coefficient of variation CV in yield of past 10 years data. However, the insured farmers of unit area may opt for higher level of indemnity on payment of additional premium based on actuarial rates. The threshold yield TY or guaranteed yield for a crop in an insurance unit shall be the moving average based on past 3 years average yield in case of rice and wheat and 5 years average yield in case of other crops multiplied by the level of indemnity. Nature of coverage and indemnity. If the actual yield AY per hectare of the insured crop for the defined area open bracket on the basis of requisite number of crop cutting experiments CCEs close bracket in the insured season falls short of the specified threshold yield TY, all the insured farmers growing that crop in that defined area are deemed to have suffered shortfall in their yield. The scheme seeks to provide coverage against such contingency. Indemnity shall be calculated as per the following formula is equal to shortfall in yield divided by threshold into sum insured for the farmer. Page number 70. Open bracket shortfall in yield is equal to threshold yield minus actual yield for the defined area. Close bracket. Benefits expected from scheme. The scheme is expected to A. Be a critical instrument of development in the field of crop production, providing financial support to the farmers in the event of crop failure. Encourage farmers to adopt progressive farming practices and higher technology in agriculture. B. Help in maintaining flow of agricultural credit. C. Provide significant benefits not merely to the insured farmers but to the entire community directly and indirectly through spillover and multiplier effects in terms of maintaining production and employment, generation of market fees, taxes, etc., and net accretion to economic growth. D. Streamline loss assessment procedures and help in building up huge and accurate statistical base for crop production. Minimum support price (MSP). Minimum support price were announced by the Government of India for the first time in 1966 to 67 for wheat in the wake of the Green Revolution and extended harvest. To save the farmers from depleting profits, since then the MSP regime has been expanded to many crops. Minimum support price is the price at which government purchases crops from the farmers, whatever may be the price for the crops. The MSP is announced by the Government of India for 25 crops currently on the beginning of each season via Rabi and Kharif. Following are the 25 crops covered by MSP. Crops: 1. Paddy, 2. Jowar, 3. Bajra, 4. Maize, 5. Ragi, 6. Arhar or Tur, 7. Moong, 8. Urad, 9. Cotton, 10. Groundnut, 11. Sunflower seed, 12. Soyabean black, 13. Sesame, 14. Niger seed Rabi crops, 15. Wheat, 16. Barley, 17. Gram, 18. Masoor lentil, 19. Rapeseed or mustard, 20. Safflower, 21. Toria other crops, 22. Copra, 23. Dehusked cocoa, 24. Jute, 25. Sugarcane. Why need for MSP? If there is a fall in the prices of the crops after the bumper harvest, the government purchases at the MSP, and this is the reason that the price cannot go below MSP. So this directly helps the farmers. How MSP is decided? The government decided the support prices for various agricultural commodities after taking into account the following: recommendations of Commission for Agricultural Costs and Prices, views of state governments, views of ministries, and other relevant factors. Price Support Schemes (PSS) for oil seeds and pulses. The Department of Agriculture and Corporation implements the price support scheme for oil seeds and pulses through the National Agricultural Cooperative Marketing Federation of India Limited. NAFED is the nodal procedure agency for oilseeds and pulses apart from the Cotton Corporation of India. So when the prices of oilseeds, pulses and cotton falls below MSP, NAFED purchases them from the farmers.